Hello, everyone. I'm Major Garrett in Washington. Welcome to The Takeout and happy Friday. President Trump talked today on social media about repositioning American nuclear submarines against Russia. This in response to social media saber-rattling by a Russian official the Secretary of State only yesterday dismissed as a second stringer with no real clout in Moscow. It was hard, therefore, to discern if this was a serious matter or not. But nuclear is nuclear, and presidential utterances containing that word concentrate the reasonable mind. The real nuclear move? Well, that came a bit later this afternoon when the president fired the commissioner of the Bureau of Labor Statistics. That agency gathers data on, you guessed it, the American workforce, its size, jobs created, jobs lost, sectors expanding, sectors contracting. This morning's job report showed meager jobs gained and contained revisions. Revisions are not at all uncommon, but these revisions showed 258,000 fewer jobs than had been reported the 2 previous months. Incensed, President Trump cried foul, manipulation, politics, saying the head of the Bureau had been appointed by President Biden. True. Also true, the person in question, Erica McIntarfer, has a doctorate in economics and has served as a labor economist for presidents of both parties at the Census Bureau and Treasury Departments for upwards of 2 decades. The president provided no evidence of jobs data manipulation. During the day, his top economic advisors and interactions with reporters at the White House did not disparage the data, but said other economic trends pointed in positive directions. The independence and reliability of government jobs numbers has now been thrown into question. That's the nuclear part of this. Not incidentally, the status of Federal Reserve Chairman Jerome Powell, whose independence global markets cherish, is also in a form of limbo, as today the president suggested the board Powell supervises rise up against him before his term expires next May. And we haven't even gotten to higher tariffs for many top U.S. trading partners, and no nation harder hit than Canada. Top White House economic advisor Kevin Hassett will join me in a moment. And Ed O'Keefe will also provide reporting from Buffalo with a small business perspective on tariffs. But first, I am so grateful to say the following words. I turn to Kelly O'Grady, who will help us with tariffs and market reaction. Kelly, please help me out.
Well, that, again, high praise. I will try and live up to it. Look, the markets didn't love all of this economic data, this new tariff data, certainly sort of one of the bigger down days that we have seen in the stock market. Of course, that could all change. You know, investors can be fickle. They react pretty viscerally. But that big driver of that was that weaker than jobs report that you mentioned. And really, the red flag for me were the revisions numbers you mentioned, 258,000 when you look at May and June. And so what this told investors is the slowdown that everyone's been fearing in the jobs market has actually been happening for a number of months. And I had the opportunity to talk to Beth Hammack. She is the president and CEO of the Federal Reserve Bank of Cleveland. She is one of the folks in the room when they have that meeting and they meet to make interest rate decisions. And I asked her about this jobs market report. Here's what she had to say.
The big news in this jobs report was the revision. When you look at the data in aggregate, we still have an unemployment rate, which is our most reliable indicator, that's at 4.2%. It's been in this range of 4.1 to 4.3% for the past 12 months. That's indicative of a stable, healthy labor market. We try not to make too much of any one individual jobs report. There'll be another jobs report that comes out before our September FOMC meeting. But there are cautionary signs there. It was disappointing to see those revisions downward.
So you hear Beth say, you know, there's some optimism, but she was disappointed about it. I think all the eyes are now focused on September because we're going to get another jobs report before then. How is the Fed going to react? Are they going to cut interest rates? I asked Beth if she would have made a different decision if she had this data on Wednesday when they decided to hold rates. She said no, that tariffs are the bigger threat right now.
And speaking of tariffs, we got some clarity last night from the president.
That's right. So we expected August 1st today, all of these different tariff rates to go into play. Now that's been moved towards August 7th. A number of rates have been set for countries like Taiwan, a lot of them lower than what we were seeing in April when the White House came out with that initial reciprocal tariff list. But sort of the big one is Canada, which I know you'll be talking to Ed in a few minutes on, that is going into effect today. And that is a 35% tariff for those goods that are outside of the USMCA. So certainly a lot of news, economic, business, and the markets reacted. Major.
Kelly O'Grady teeing us up to talk to Ed O'Keefe. Guy, where do I go? One or two? I'm going to go right here. There's Ed O'Keefe. He's right there in front of me. Ed, you just got back from Buffalo. Tell us what you learned.
Yeah, don't move, Major. We're right here for you.
We were up in Buffalo, and we decided to go. Day.
Well, we went to Western New York because that part of the country acutely feels the ongoing effects of the trade war with Canada. They rely so much on Canadians to vacation on the southern side of the border in the summer, to come over in the winter for Buffalo Bills games, and just to come hang out on that side of the Great Lakes. But turns out they're not doing that as much as they used to, and it's affecting businesses there. We talked to Jeff Ware with the Great Resurgence Brewing Company in downtown Buffalo about this. He says, look, construction costs are going up, labor, lumber, steel, ingredients I need from Canada all hit in one way or another, either by inflation or tariffs. But the one thing I didn't anticipate was fewer Canadian customers. Take a listen.
What we can't navigate is an angry Canadian customer base who is half of our demographic here in Buffalo. So we've seen a pretty significant drop in customers coming in the door that are Canadian, which is definitely affecting our bottom line.
These are people who would have come across the border into Buffalo to hang out, and they're not coming anymore.
Yeah, 100%. So it's summer season. There's a lot to do in Buffalo. So people coming down for festivals, they're coming down for concerts, they're coming down for ball games. And when they're here, those tourism dollars spread to all the local restaurants and bars, breweries included. We're a full tap room restaurant, and so we're missing those customers that are not coming down.
So you're seeing a huge drop-off in Canadian foot traffic.
I'd say myself, and in talking to locals around Buffalo, probably 15 to 25% down year over year based on the lack of Canadian traffic.
Which is a huge hit, especially this time of year.
Huge. I mean, we're making beer. We're in beer season. Right. We say if you can't sell beer in summertime, you can't sell beer.
From the brewery, we headed about an hour inland to Pavilion, New York, and a farm run by 27-year-old Jack Clapper, seventh-generation farmer, 5,000 plus cattle on this property, pumping out 13,000 gallons of milk a day. Similar story there. Fertilizer's costing a little more, although they make much of it there themselves. And then they've got the same issues with lumber and steel as he tries to build a new barn, and it might price him out of doing so. But he sees a glimmer of hope in the trade agreement that the president appears to have reached with the European Union. Listen to why.
I am a very wait-and-see type of person when it came to this. Let's see how it plays out. Let's see what's affected. Let's see how it goes. The most recent trade discussion or trade deal that got done here the other day between the EU and the U.S., we have a very, very difficult time to deliver dairy products into the EU. I feel like as a dairy farmer, we kind of won. EU products are now being slapped with a 15% tariff fee coming into the United States. But we still have difficulties with the EU even after this trade deal is done. We can't ship certain cheeses into Europe because of the name of the cheese. So if we're making Parmesan cheese or feta cheese, we're not allowed to ship that into Europe. And there's a lot of red tape, attached to that. But it seems like when there's butter that wants to be imported into the United States from Europe, it's it's a wide open door for them. So it's nice to be able to feel like we're getting some reciprocation back.
There's a wide open door, but those European goods are going to be more expensive now, which potentially is a benefit to you guys.
Correct, which will have a benefit to us in the grocery stores. We're not asking for anything crazy. What we as dairy farmers want here in the United States is a level playing field. If you give us a level playing field to play on, American dairy will win every single day.
Our thanks to brewer Jeff Ware and farmer Jack Clapper. The summer resurgence up in Buffalo, Major. Chef's kiss. Jack, by the way, only 27, spends a lot of time lobbying at the state and federal level on behalf of farmers. It's come down here a lot. Don't be surprised if we hear from him again one day soon, Major.
Ed O'Keefe, this is, of course, a D.C.-based show, but we love perspective that you can grab for us and other CBS reporters can grab outside of the Beltway. Thanks for heading to Buffalo. Appreciate it very much.